So I'm going to share that with you guys. So good morning, guys, and welcome back to my channel. It's Thursday the 17th of December. I do apologize for the state of my office. There are wrapping papers and presents everywhere. Anyway, I don't normally trade in the month of December. I wrap up my trade in the end of the last week in November, and then have the month of December off because the market itself is kind of winding down for the Christmas holidays. There's normally nothing happening. The market's normally flat. So I wrap up my trading in November, and then I come back in the second week of January to get started. However, 2020 has been an interesting year. I'm in the market in December. I've got two positions open, and the reason I'm in is primarily for Brexit. I'm looking at the pound. I've longed the pound on the GBP yen and the GBP Swiss franc. I'm up 137 pips on the GBP yen at one standard lot, and I'm up 30 pips on the GBP Swiss franc at one standard lot. So if price action move against me, I'll come out at those pips, which for the GBP yen works out to be about £500. For the GBP Swiss franc, it works out to be about £350. Worst case scenario. So if Boris Johnson issued an emergency press release, or the Brussels issue an emergency press release saying there's certainty of a no deal, then my stop loss will be triggered on those two pairs, meaning that price action is going to move against me, the pound is going to drop, and I will come out with those numbers that I've quoted you. However, if they did come out with a press release saying there is certainty of a deal and it's been confirmed, the pound is going to rally, and I've got my take profit at higher highs on those two currencies pairs, which I will show you guys when we jump into charts. But once we go into the charts, I'm going to share with you guys two main things, like the most important things you must always do when you open a position during any session, whether it's a volatile session or it's a normal session. You must have a sensible stop loss. So that will be based on your strategy and your market psychology, and your fundamentals and technical knowledge as well. So you must have a stop loss, and you must take advantage of an advanced stop loss. A lot of trading platform will have an advanced stop loss, which is what you enter your advanced stop loss settings in an open position, and you set a number of pips that you want your the automated stop loss to be moved to those pips if market moves in your favor. So you can have your break-even point, which will cover your commissions and your swaps, and then you can have you can then add on certain number of pips that your stop loss can move in. So if the market moved against you, you can come out with a certain number of profits, or you can just leave it at your break-even point. For me personally, I don't like to leave it at break-even point, because you can spend all day in a position, and then the market moves against you in a volatile session, and then you come out break-even point, so you kind of just basically wasted a day. However, you got to be smart about your stop loss and your take profit as well. I'm going to share that with you guys. We're going into the chart, so let's jump straight into the chart. We jump straight to the GBP Swiss franc on the weekly. Stroll the chart a little bit to the right, and you can see down here is my GBP Swiss franc position at one lot. Buy. I'm currently up on 63.9, so 64 pips. Gross 534, and my net is 523. So my stop loss is just a couple of pips below this, so it's about £500 stop loss, as I've discussed. If the market price action move against me, in the worst case scenario, I'll come out with about £500 on this position. And we just look straight to the charts. Let's just jump down to 4 hours so you can see my position. So one lot position here, open at 1.18, and stop loss is up 34 pips at 1.19. We see a little retracement here at 1.194 of price action. I'm not expecting my stop loss to be triggered. I'm expecting a continuation to the upside. I'm seeing where things are with the fundamentals, so the market's kind of still pricing in a deal of some sort happening over the weekend, but I'm not going to touch my stop loss. I'm going to leave it where it is at the moment, just in case.
and I will show you where my take profit is, if everything goes according to plan. So we got these highs here at 1.29. My take profit is at 1.57. So that's the highs of 2015 highs. So I mean, if there's a relief rally, there will be a relief rally if a deal is announced over the weekend or early next week. I'm not expecting my take profit to be triggered at this level. I'll be expecting a relief rally to go up to about 1.45, where at that point I'll probably most likely take profit, move my take profit down or close my position. But if my take profit gets triggered, we can see here, let me just hover over that, it's at 3,833 pips, which as I said, it's a bit of too much of a realistic position, but you never know in these times, and that equates to 34,000 pounds. But yeah, I don't expect I don't expect that relief rally. If we do get a relief rally, I don't expect it to go up to 1.57. But again, that's where I kind of just put my my take profit to just, if we stroll the chart a little bit to the right, to to kind of just keep the technicals in line with previous highs, which will be which in this case is 2015 highs. So this is the position I have open in regards to the trading the fundamentals on Brexit. I mean, December 1 GBP Swiss franc. We'll move on to the next pair, which I've also got a position open on, is the GBP yen. Now on the GBP yen, if we just jump strictly to the weekly, I'll show you stroll the chart a little bit to the right and show you where I am with that. So we can kind of see we're consolidated to these support levels here, the 139 levels. And again, if we look down to my position, the GBP yen, one standard lot, I'm up 65 pips as well at 460 pounds, still moving. A gross net is 445. And if we just jump down to a lower time frame, and I can just give you a bit more information on the position. See, one standard lot, my stop loss is in at 27 pips, which again equates to 450 pounds net. So as with the GBP Swiss franc, if price action does move against me, I'll come out with a few pips below that, so about 450 pounds, 440 pounds. Worst case scenario, the market starts to reverse on sentiment of a no deal, then my stop loss will be triggered. That's fine. My take profit on this trade, if we just jump up to the weekly, scroll the chart down a little bit, sorry, just jump up to the monthly because I've got that really high. My take profit on this trade is at higher highs, which is December 2004 highs of 246 yen to the pound. I don't expect price action to rally to this take profit level of 244. Even if we do have a deal or a deal got announced, I expect the relief rally to come up to something like the 193 and then retrace back. So I will then move my stop loss manually and take profit. Take profit accordingly. I'll be taking profit. I'll be hoping to take profit at the 1449 level. So these highs here, it all depends on the momentum of that release rally, because you never know. So I always tend to put my take profit to previous higher highs. In this case is 249 all the way to the top of 2005 highs. I'd rather my take profit at that higher highs, because you never know, the rally might have a stronger momentum than the markets cannot foresee, and my take profit will be fine where it is. Also, if it doesn't get to the highs, I can always go in manually and edit the trade as I see fit. But for the GBP yen, that take profit at 2005 highs, which is the 245 highs here, equates to 75, well, equates to 10,495 pips, which pound equivalent is 75 75 grand. But as I've said, I don't expect that take profit to be triggered. Even if we, you know, if we got a deal announced, I expect the rally highs to come up to the 176. At that point, I will manually, well, looking at the momentum and seeing where we are, I will manually move my stop loss accordingly to be protected, and then, you know, see how far it goes. Any highs between the 196 and the 245 highs, I will also be expecting a retracement. So at that stage, if I do come out the trade, I will be looking at a point to go in and short the pound, which will be early next year, because, you know, there will be, the relief rally wouldn't continue for, you know, for a long time. It will because the economy will still be, you know, still be in a state of confusion in terms of, okay, we've got a trade deal now, what's next? Unemployment is still not where it should be. Coronavirus is still where it is. Stimulus packages hasn't been approved yet by the ECB or by the Fed, and the Bank of England hasn't really, you know, set out any trajectory on what they plan on doing in case of a deal or a no deal. So this is where I am at the moment, guys. If you've got any questions, do drop it in the comments below, and I'll catch you guys in the next video.
Okay guys, there you have it. If you've got any questions or anything that I've discussed, do drop it in the comments below. If you haven't yet subscribed to my channel, do hit that subscribe button, help support my channel. Have a good Christmas and a good New Year, and I'll catch you guys in the new year. Till then, bye bye.